Hi, in this week's video we're focusing on the recent market volatility, and what we want to see is whether or not investors are positioning themselves for a short run bout of volatility or whether or not this is a longer term trend that will sustain in the coming weeks and months. So if we look at the implied volatility in options currently, we saw that there was a rapid spike in the last couple of weeks, and if we look at the S&P 500 90-day at the money implied volatility, we saw that the options saw their highest volatility in over 2 years. So definitely a very sharp reaction from the options market to the recent volatility in the market. And again, that is as the S&P 500 lost about 8% from its all-time highs in the last month. Now, if we see in the last couple of days, looking at daily index movements, we see that volatility has come right back down again, but it still stands above the recent market lows that we saw prior to the event. Now, if we look on the smaller cap end of things in the Russell 2000, we could see that there's been more of a gradual shift, and these options are still priced relatively higher than the S&P 500, which is what you'd expect in the recent market movements. Now, if we want to see whether or not this is a longer short-term trend, what we can see is that ETF investors have been piling into volatility tracking ETFs, which at first reaction would make you think that this is a longer-term trend, and that they're thinking that the volatility will be here to stay for the long term. But actually, if you dig down a bit deeper, what you can see is most of that money is actually going towards inverse funds, funds that stand to benefit from declines in volatility from the recent highs. And if we just focus our attention to just the funds that benefit from increases in market volatility, we can see that in the last few weeks, investors have actually been pulling funds away from those. So what we're seeing profit taking in the wake of the recent volatility for those funds that benefit from a rise in volatility, whilst the active money is actually flowing in towards the funds that stand to benefit when the recovery does fall back to its recent lows. So definitely an interesting move to look, and we encourage you to go on the commentary section of our website to read the full report. Thank you very much, and have a nice week.